Hey traders, it's John Fortune here of this week's weekly Forex Forecast. I hope you're having a great weekend. Let's kick off with the DXY. In last week's video, I highlighted the fact that we had this big rally to the upside in the DXY. We also saw currency selling off against the Japanese yen, this risk-off move, as the Federal Reserve Chairman Powell came out and stated they were talking about raising interest rates, which of course is an escalation in terms of raising interest rates compared to what they were previously saying, which is that they were not even thinking about raising interest rates. So because of that, we had this big rally to the upside in the DXY, and as I said, we also saw currency selling off against the Japanese yen. And going into last week, I was looking for further advances to the upside in this market. We needed to see a correction first, and we have started to get this correction. Last week was actually an inside week in a number of markets, including the DXY, and this is to be expected because when you have such a strong move in the market needs time to pause, to correct, to consolidate before continuing on in its journey. So we did get a nice correction last week, and we started to break out of this correction in a sideways move. Now, if we look at this pattern, it looks like we have a triple bottom here. We have 1, 2, 3 failing to break and even close below this level. And at the same time, you could argue because we have a higher low over here and a higher low over here, that this could be viewed as an inverse head and shoulders. Either way, it doesn't really matter. The key point here is that any break above the 91.90 will confirm either of these patterns, and that will be the sign we should start looking further advances to the upside in the DXY. So any break above the 91.90 will be viewed as the opportunity to start to look for further advances in the DXY up towards the next key of resistance to the upside and the target set at the 92.70. I do go into next week with a bullish bias on the DXY once again, and I do favor dollar strength positions next week, and I think the dollar pairs still offer the best potential to make money as it currently stands. Euro dollar. Now, last week in euro dollar, I was looking for a pullback in this market, further declines to the downside. We have had this pullback, very similar to the DXY. We had an inside week in euro dollar. We have not yet reversed, even though we're starting to break out of this uptrend. It looks to be that we are developing a double top pattern, not yet confirmed. If we can break below the 1.19180, this would be a confirmed double top in this market. We can start to look for bearish entries down towards the next key of support to the downside and the target set at the 1.1795. If we fail to break this and we just continue higher, this is just going to be a better opportunity at a better price to start to look for those bearish reversals down to the target set. Next is Aussie dollar. Now, I do like Aussie dollar for further declines. We've started to pull back and we are creating a nice bear flag setup in this market. So any deeper correction in Aussie dollar is simply going to be viewed as an opportunity to look for bearish reversals down to the next key of support to the downside and the target set at 0.7451. When you're looking at other markets as well, just bear in mind the Aussie is currently suffering the most from this rally in the dollar, and we're seeing quite a bit of Aussie weakness across the board. So I do like Aussie dollar going into next week. New Zealand dollar, we're also forming this bear flag setup in New Zealand dollar. We've got this counter trend move marching towards the top of this downtrend or this down channel here. And I am looking further declines in this market going into next week. So now we've had this pullback. This is a really nice pullback. We're getting a deep pullback. Any reversal in this market is going to be viewed next week as an opportunity to look for bearish entries down towards the next key of support to the downside and the target set at 0.6842. And if you want to be a little bit more conservative in your target next week, you can look for the low of this previous sell-off in New Zealand dollar as a more conservative target. The next dollar pair I like is US dollar franc. Now, after previously noting this major double bottom reversal in US dollar franc with that rally, that risk-off rally we saw after the Fed comments, we just started to correct, very similar to the other dollar pairs we've looked at in US dollar franc. So very simply put, going into next week, this is just simply viewed as a potential buying opportunity. Any bullish reversals in this market will be viewed as an opportunity to start to look for long positions into the next key of resistance to the upside and the target set with 0.9268. Next is pound dollar. Now, pound dollar is also showing the same setup, this bear flag setup. We had the correction and we've started to break to the downside already at the end of last week. So if anybody not involved from last week, any pullback in this market, once again, will be viewed simply as another opportunity to start to look for bearish reversals down to the next key of support to the downside of the target set at the 1.3707. Next is gold. Now, last week's video, we were looking for a correction in this market for further declines, very similar to the setups we were looking at in the other dollar-based pairs with the flags. And last week, we ended up forming this pennant, which is a bearish continuation pattern in this case because of the previous follow-through to the downside, the pennant, and then a continuation. Now, what's interesting about this is, while some of the other currencies actually managed to form slightly deeper pullbacks, Gold really just moved sideways, so this is very bearish for gold going into next week. So any continued correction in this market is simply going to be viewed as an opportunity once again to look for bearish reversals down to the next key of support to the downside and the target set at the 1739.71. Next is silver. Now in previous videos I highlighted this head and shoulders reversal pattern, and we had a big sell-off having broken this, retested, and then we had that sell-off and we traded into the target set last week at the 25.630. So very simply put, going into this week, I do have a bullish bias on the dollar, so I am looking for further declines in silver. Any continued correction is simply viewed as another opportunity to start to look for bearish reversals in this market down towards the next key of support to the downside and target 2 at 25.12. Next is Bitcoin. Now in last week's video I highlighted the fact we had broken out of this counter trend move in Bitcoin and I was looking for a move into the 30,000. We did take out this target set from last week and we spiked, and that was more or less the low of the week in Bitcoin last week. We came down to the 29,000 handle. So very simply put, I am still bearish on Bitcoin. I did tweet out last week that I wouldn't be surprised if we started to bottom here, but if you look at the previous low over here, and if we were going to be considering this as a potential double bottom, we would need to come and break roughly the 41,000, 42,000 in order to confirm this as a major bottom in Bitcoin. As it stands, this is just a lower low in a downtrend. So for that reason, any pullback next week in Bitcoin would still be viewed as an opportunity to look for bearish reversals once again in this market, down to the next key of support to the downside and the target set at the 28,389. Now if we break this level, the next target to the downside is the 24,300. So if we can get through the 28,389, there is a bit of a gap down towards target 2, and we could actually see Bitcoin moving quite quickly between these two levels. Next is crude oil. Now last week's video we started the week down in this area right near the 69.76, and I highlighted the fact in last week's video that I was looking for a rally into the 73.12 and the 73.92. We did get this rally. It was a nice move last week in crude oil, and that was pretty much the entire move in crude oil last week. Very simply put, I am still bullish on crude oil going into this week, so any pullback once again in this market is simply going to be viewed as another opportunity to start to look for bullish reversals up towards the next key of resistance, the upside and the target set at 76.77. Because crude oil is still strong, this is having an upward effect on the Canadian dollar as well, and this is why US dollar CAD wasn't added in this week. I am hesitant because of the stronger oil to short Canadian pairs next week. I think I'd much rather prefer to short Euro pairs, Aussie pairs, New Zealand pairs. Next is the SPX. Now last week I had a bearish bias on the SPX because of this sell-off, and notice how we just V-bottom. This is why I always look for bearish reversals, bullish reversals, because if you have a sell-off like this and the market starts to correct, what you're looking for is a break lower, a failure to make the new high, and then you can start to look for further declines. In many cases, if the market reverses, you won't have this reversal. It will just continue to reverse to the upside like it has done here, and it means you won't end up taking any trades in these markets at all if you don't get those bullish and bearish reversals. You'll filter out a lot of these reversals. So going into this week, I am bullish on the SPX once again. Any pullback in this market would be viewed as an opportunity to start once again to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 4361.92. Next is the Nasdaq. Now in previous videos I highlighted the 14067.42 as a target to the upside. We did achieve this after breaking out down in this area, and last week we were sitting right at this target after taking it out. I did note last week that we hadn't yet reversed in the Nasdaq, unlike we saw in the SPX with that sell-off, and although I wasn't bearish on the Nasdaq because of that, I also didn't favor long positions because of where we were sitting last week. So last week was a bit of a wait and see week in the Nasdaq, and we did break higher last week. So because of that, I do like further advances to the upside in the Nasdaq once again this week. Any pullback to previous broken resistance looking to turn support at the 14067.42 will be viewed as an opportunity to start to look for bullish reversals into the next key of resistance, the upside and the target set at the 14699.06. And the final index we're going to look at is the Nifty. Now, in previous videos, the Nifty has been a very good performing market. We've taken out multiple targets ever since reversing with this inverse head and shoulders. Last week, I highlighted the fact we were looking for this pullback towards the 15.43330 for a rally higher into the 15.987. We have had this move. We haven't taken out the targets yet. So very simply put, for anybody not involved from last week, I am looking for these targets to be taken out now. Any correction, once again, in this market is simply viewed as another opportunity to look for bullish reversals into the target set last week at the 15987.45. And finally, we're going to finish off with 4 yen pairs that I like going into next week. Aussie yen, we have a very similar setup here because we have the risk-off move to the downside when the DXY and the Japanese yen advanced or strengthened against the other currencies. And I'm looking for further declines to the downside. It's a follow-through of that move. Last week we corrected, very similar to what we saw in the DXY pairs, with no reversal to the downside. However, you can see we're starting to run out of steam on this correction. So very simply put, any deeper correction in this market is simply viewed, very similar to the other setups we looked at, as a great opportunity to look for bearish reversals down to the next key of support to the downside in the target set at the 82.15. Next is New Zealand yen. Now, last week we corrected the risk-off move to the downside in this market, although we haven't made new highs, we haven't yet reversed, and we also tested the top of this downtrend. So, very simply put, going into next week, very similar to the other setups we looked at, any reversals in this market next week to the downside will be viewed as an opportunity to look for bearish entries down to the next key of support to the downside in the target set at the 76.24. Euro yen, again, because of the nature of that risk-off move, you can see a lot of these setups going into next week are looking the same. So just bear that in mind if you are looking to trade multiple positions. You don't want to trade too many correlated markets. However, going into next week, we have now had a correction in Euro yen, and it looks like we're starting to reverse to the downside. So any bearish reversals in this market next week will be viewed as an opportunity to start to look for bearish entries down to the next key of support to the downside in the target set at the 129.95. And last but not least, we have franc yen. After this huge sell-off to the downside, this reversal in franc yen, somewhat of a large double top reversal below the 121.470, we started to correct last week. I'm simply viewing this as a better opportunity to short franc yen. So any continued correction in this market will be viewed as an opportunity to look for bearish reversals, which we have not yet had. Any bearish reversal in this market will be viewed as an opportunity to look for short positions down to the next key of support to the downside in the target set at the 118.66. So that is it for me for this week, guys. Don't forget, if you'd like some midweek updates on these markets and other markets as new information comes in during the week, feel free to follow me on Twitter, where I do post regular updates during the week. I want to say a big thank you to everybody who likes, shares and comments on this channel on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.